Yeah, I never try to tell people where the market is going, lest they quote me and say, Terence told us buy euro or
Yeah.
sell euro and it didn't work out. As an analyst, I could be right or I could be wrong. But what is great about markets, what I love about markets is it's alive. You can test the strategy as you speak. If you can't explain what's happening in the market, either you are not aware of the information or there's no information that's come in. It's just your buyers and sellers. Maybe there's a big buyer out in the market.
What's up, traders? Welcome to another installment of Market Masters Out and About edition with myself, Nqobile Tembane from Top Trader South Africa. This season is sponsored by Exness, an international multi-asset broker which is also licensed right here in South Africa. On this show, I sit down with the most prominent and talented traders in the industry, and we have chats on all things trading. Yo, what's up, guys? It's Nqobile Tembane from Top Trader South Africa, and we're bringing you another episode of Market Masters Out and About, chilling with your favorite traders and having conversations with them. And today I've got like a very special guest right here with me. I've got Terence Hove, but for those who don't know how to say that, Terence Hove. Yeah, how are you?
I'm very well, thanks.
Great. I am great. I'm great. So I'm sitting down with you because you're not just anyone. You're a market analyst from Exness. You work under Exness, and obviously everyone knows that Exness is a sponsor of this show. So I was told that, hey, look, can you sit down with one of our market analysts and discuss markets? So that's what we're going to be doing today. Just talking markets.
Yes.
Yes,
Thank you.
and your story as well, how you ended up at Exness, the work life there, being a market analyst, because I'm very curious about that, because the thing is, I've been sitting down with a lot of retail traders, if I can put it like that, a lot of guys who are on the retail level, and never anyone who's like on a larger level, like larger scale of an actual market analyst, you know, because a lot of people might call themselves, yeah, I'm a good analyst, whatnot, but you actually do that for a living.
Yeah. Pays the bills.
So you're a market analyst. What is a market analyst? What does a market analyst do?
Yeah. Well, thanks for the time, Nqobile, for us to have this conversation. And firstly, answering that question, what does a market analyst do? I think, firstly, the answer is in the title. It's one of those titles that answer what the person is supposed to do, like a doctor being a doctor.
Yeah.
So my chief responsibility is really to analyze the markets, everything about the financial markets, and understand what trends are developing or what trends are going to develop, where the market is going, why it's going there, the fundamental issues or aspects that's actually leading it to get to that level.
Yeah.
So that's what I do on a day-to-day basis, including interacting with clients, with our Exness clients, which is very chief in my role, to give them an overview of where the market is going, and also to assist them with risk management. So markets is not just about profit, but there's also the loss side of it. So how are you going to mitigate that risk? So the role in campus is a lot of interaction with clients internally as well. My clients are also my colleagues. Some of my clients are also my colleagues, where I need to educate, I need to direct conversations in the right spaces and try to balance the market view of where the market is likely to go.
Yeah.
Not where it is definitely going to go, but likely to go. Yeah.
No, that's great. But what does your day-to-day look like? But what is it that you actually do? Like how does your day actually look, though? Because obviously, as somebody who analyzes a market, are you analyzing a specific session, or are you analyzing how does it look? Are you up all the time, or are there specific sessions that you focus on?
Right. So I think how I would describe the start of the day is the start of my week.
Okay.
So the most important thing in trading, like our traders would know, which is our clients, is you need to plan your trades. So it's the same thing with myself. So I need to plan my week. First of all, typically wake up quite early on a Monday, get a gist of where the market is. But that also starts on the Friday, watching the market close, where did the market end, and, so, okay, Friday we ended with, for example, this past Friday we had a surprising US non-farm payroll data print.
Yeah.
Okay, so what is it going to mean for the week ahead? So I look at the calendar, say on a Friday, to say, okay, next week we're expecting that data coming out. Then Monday, so that helps me prepare for Monday. So Monday I'll sit down, look at the calendar of the week ahead, which is your key data. So key data is what is going to move the market. Firstly, mostly all the things US move the markets.
Right.
Second to the US is the euro. Second to the euro is the pound sterling. And mostly this is driven by liquidity. So once you have a gist of where these three currencies are, because they are base currencies in themselves for some pairs that are traded. If you're going to trade gold, you also need to understand where the US dollar is. If you're going to trade oil, because the oil price is quoted in dollars. So you need to understand, okay, this is what the dollar price action is. Not that it'll affect oil like directly in itself, but it gives you a gist of a base of where to start looking.
Exness offers a free demo trading account for beginner traders to trade on. The demo account interface is ideal for traders who want to practice their strategies or learn to trade without incurring any trading risks or losses. You can practice trading in a 100% risk-free environment.
So it'll be your first, call it 5 instruments that I typically look at on a Monday morning, top of the morning, which is euro dollar, which is pound yen. I look at gold, I look at oil, and I look at Bitcoin. So this is my formula, this is my strategy. This is a start, but it doesn't stop there. So this is just to get an idea of where the market is. And then from there, I then go into, okay, this month, for example, in January, it was earnings season, when the earnings season started for US corporates, and then it went on into Europe. So what do those earnings mean? And what are going to be the big drivers? For example, some of our clients trade the NASDAQ 100. So it's one thing to look at the technicals, but it's another thing to understand what's driving the price action, or what might drive the price action. Like we saw last week, Meta, or formerly Facebook, came out with a 10 billion loss in valuation. That wiped out about close to 285 billion off the NASDAQ 100 in itself. So from 25, from initial 10, that's went into 25, of the company itself, and then you get the entire index losing 285 billion on one company's earnings announcements. So that is so significant in terms of what Facebook contributes in terms of price action to that tech industry. So you need to know these things, and that's where I come in. I'm able to say to my client, look, Mr. Client, or Mrs. Client, or Miss Client, you need to be careful of this. And these conversations are guided by what the client trades, because I can't impose my view on them and say, oh, Mr. or Mrs. Client, trade this or that. So they need to tell me they're looking at this. And from that, I can then say, okay, I think you should be careful of this, perhaps look at that, perhaps consider this. And that is somewhat the approach and the value add we try to give to our clients at Exness.
Sure. So you spoke about key data.
So what key data is? This is market moving data. That's it in a nutshell. Yes, most data is market moving, but there's more market moving data than other market moving data. For example, last week Wednesday, in a session with clients, Euro CPI came out 5.1%, higher than what estimates and expectations were. Guess what? The euro started rallying on that print. Why? Because its future, because of the inflation that's in Europe, that's come out higher than what was anticipated. So now the market expects the future expectation of interest rates to be higher in order to cool down inflation. So that's key in terms of the instruments that it will move. That we'll take it into that very basic theory, that market hypothesis theory, that the market always reflects all available information. And whenever new information comes to the market, the price reacts according to the new information that's come in for the price action to find equilibrium.
Yeah.
So that's what key data is. It's that data that moves the market or moves a particular instrument, whether it's positively or negative.
Sure. So with these clients that basically come to you, obviously they're Exness clients, but when the clients are there, like, how do those sessions go? Me as a client coming to you,
Yes.
I'm like, hey, look, I'm trading Euro USD right now.
Yeah.
Do you just give me advice, or do you tell me where the market is going? Or how does it work?
Yeah, I never try to tell people where the market is going, unless they quote me and say, Terence told us buy euro or sell euro, and it didn't work out. But what typically happens, so this is through our relationship managers, which are the key account managers or the key account specialists, or and from these relationships, they'll typically schedule a meeting. And there'll be a small brief, Nqobile wants to look at, let's say, euro, dollar, and gold, right? We'll use that as an example. So, okay, Nqobile has been making a lot of money. He now wants to increase his profit level, right? So there always needs to be context as to what conversation you want to have, because I also need to prepare to advise well of that conversation, lest I misquote myself or give the wrong advice. So I'll need to then prepare and make sure that the facts and figures that we are discussing make sense, and also looking at your trading history as well. Where have you succeeded and where have you, where are the shortfalls that need correcting?
Yeah.
So we'll then look at it as from euro dollar, and would discuss maybe where it is at the moment, where the price is, why the price is there. It's always very important to know why the price is there, because in a way that's going to dictate, or that forms the basis of where it might go.
Yeah.
And why it might go there.
Yeah.
And that's the conversation, we start unpacking it. And we test these theories real time, right? Because as an analyst, I could be right or I could be wrong. But what is great about markets, what I love about markets, is it's alive. You can test the strategy as you speak. We can say, okay, so if this price action does this, like we did last week in a live euro dollar trading session, right? And as I was explaining factors that clients needed to be aware of, that's where I was able to then direct them, or direct the thought pattern of what they should consider.
Yeah, sure.
Yeah.
You spoke about Exness having key account specialists.
Yes.
It's no secret Top Trader SA is sponsored by Exness, but obviously I've had time to talk to a lot of guys from Exness and all that. What I'm fully aware and what I've noticed so far to date is that, especially now that you have a team in South Africa, is that you guys are so involved with the clients.
Yes.
It's not just a thing of, client, you're far, whatnot. Like, you guys are really in there with the clients as well. And you guys are required to, actually, when I heard this, I was like amazed. You guys are actually required to know what's happening in the markets as well.
Yes.
Yeah.
Yes, that is a big ask of Exness office, in most so of my role. And it's no different from all my other colleagues. They need to be very much aware of everything that moves markets, because clients' money is at risk. Whenever you place a trade, you are at risk. You've opened up risk. So each and every single day we wake up, we need to make sure that our clients are in the best position possible to manage that risk. And you cannot manage risk that you don't know. And if you don't know it, you won't understand it. So it's very imperative for us to know all of these aspects and in turn understand what the implications are. Because a happy client is a happy Exness. That's very important to us.
Yeah, beautiful. Yeah. Well said.
Yeah.
No, that's great. But like, I think I'm trying to understand is that now you're a market analyst. What were you doing before being a market analyst at Exness?
Okay, so prior to Exness, I was actually in call it fintech, where I was actually leading a team, the Africa team actually, for one of the vendor that provide data to a lot of liquidity providers. So your big banks, your big corporates, enabling them to trade. So I was leading that team in solutioning these solutions to the clients. And prior to that, I was actually on the dealing desk as well, trading foreign currency professionally, and advising our clients as well. Some of them were exporters, some of them were importers of is it ideal to buy? Is it ideal not to buy? How should they hedge? Should they not hedge? You know, i.e. taking out a forward contract, is it the right thing for them? Is it just better for them to deal in spot, for example, as compared to hedging the risk? Shortly before that, I was with one of the big bulge banks out there, Citi, and bringing their corporate banking in as well as their treasury team as well on the fixed income and FX desk.
Yeah, so you've really been in the industry.
I mean, I've had a wealth of experience within the industry. I mean, one thing I didn't touch on was, my experience in time in wealth management as well. And that's when you realize, at that time when I was still at that side of financial services, on what this exchange rate means for someone who's trying to invest, whether locally or offshore. And what are you protecting, against, and needing to understand that relationship between inflation and interest rates, and that's very imperative to wealth management. So I've had a interesting call it 360 view of financial services.
Sure. That's really great. It's nice to know that all that experience though, that people can have access to that as well.
Yes, definitely.
Yeah, because you sound very experienced. The terms that you're using are like terms of somebody who's actually in the within the industry, properly immersed in there. So that's really cool though, to know that hey, people can have access to you.
It comes with passion. I mean, that's one thing about markets. It's either you love it or you don't. Even if you get in just trying to make a quick buck, if you don't love it, it's going to teach you a lesson, and you will pay school fees for that. Markets are very good at making you pay school fees.
So true. As a market analyst, I think I've had this view of a market analyst, that a market analyst is somebody, obviously, you just analyze the market and that's your job. That's it. You don't trade. Do you trade?
Yes, so I do trade. I traded before, so I do trade. At the moment, I'd cooled down on the trading. As we spoke earlier before, with trading, you need to be in the right mindset and prepare yourself. As I mentioned, prepare your day, prepare your week on trading, and you trade the market. You don't trade the emotion. You don't trade the assumption. You trade the market. So yes, definitely, I do trade, and that's the fortunate thing about being with an employer such as Exness, because they actually allow you that opportunity to also trade on the platform as well.
No, that's great. But okay, so obviously your job is to collect data basically, and like, does anyone trade that data, or is it just mainly available for the clients, or does anyone internally in the company trade the ideas that you present out there?
So the thing with ideas, it's a view. When you're in markets, as a trader, as an analyst, as a strategist, you always need to have a view. So what I hold every single day is a view. So all of this data that I look at, that I analyze, I don't collect it to support a view, so to speak, but I collect it to generate a view. And the collection is more through reading and analyzing and understanding the data. And if I need to refer back to it at some point where I've archived it in a place where it's easy to reach. So what I then put out is my view of the market, whether it's a buy, whether it's a sell. But again, I can't explicitly say buy now or sell now.
Yeah.
But I will tell you where it looks like it's going. And from there, it's then up to yourself to say whether you want to get involved in the price action or whether you want to stay out, So that data really is meant to drive my view of the market, and in turn share that view with my colleagues and our clients.
Yeah, sure. We spoke earlier on about trends, and obviously your job is to see the trends, analyze the trends, predict the trends. So what are the biggest trends that we've seen in the past 12 months?
Well, COVID, that was the first biggest trend, and I think COVID lasted longer than we all thought it would, and we all wanted it to last longer. It really, stuck out longer than we anticipated, and its effects as well in the market were far tremendous. So that was the biggest theme in the last 12 months. And from that, I think two themes started coming out, especially more so last year in 2021. The first was supply chain constraints, where producers did not have sufficient, for example, in the UK, truck drivers to get their products to the market. And this was starting to be felt throughout, even in the energy sector as well, as we saw the energy sector was one of the key drivers of inflation in the euro area, with that 5.1% print. So that was the first. Then the second was inflation. Because of economies opening up from lockdowns, generally there is going to become price pressure from the demand of consumption from consumers. And when this inflation started, at first, central banks termed it as transitory. It's going to settle down because we've opened up the economy and, it's just a rush. Yeah. Literally, think about it as a rush. Once the rush subsides, it's going to be subdued. But you also look at the backdrop of what's driving this consumption is that interest rates were at historic low levels globally. So there was easy money, and some would term it as cheap money, that was now available in the market. Now, either wise borrowers restructured their more expensive debt to cheaper debt, it was easy money. Some showed up that easy money because they're paying very low interest rates on it. And then they started using those funds for consumption, right? And so there's strong buying power out there in the market. That is, I think, one of the reasons why inflation has been quite sticky and persistent as we're going out into 2022, which from those trends of 2021, they've been the foundation of the trends for 2022. As we opened up the year, inflation is a big thing. Yeah. And with inflation, then comes the interest rate discussion of central banks sounding very hawkish now, with anticipating interest rate increases, as we've seen with the Bank of England. as we've seen with locally with the South African Reserve Bank as well, and possibly the European Central Bank, the ECB, President Christine Lagarde, has also mentioned that they are now relooking that position, that dovish position that they have. So I would say those were the trends in 2021, now leading into the trends for 2022.
So that's basically just been like a setup for the next year.
Yes, the setup for the year ahead.
Yeah.
And now the question is, how do you position yourself for the year ahead? How do you take advantage of all these opportunities? Whether positive or negative, there are still opportunities.
Yeah, so obviously we just went past 12 months. Now we're going to the next 12 months. As somebody who's sitting down as an analyst, now you need to sit down. Obviously, it's still early in the year. So you're looking at the year. You've probably already just seen the year and like analyzed the kind of trends that people should expect.
Yeah.
So what are those trends that people should expect?
Well, Nqobile, I wish I could see what the year ahead would be, and man, then I'd be a super trader, so more in the profit than in the loss. So it's very difficult to really say where are we going to be by the end of the year. We sort of like forecast that there's a possibility, not a probability, but a possibility that we might end up in this particular position at the end of the year. Last year, for example, some asset managers were of the view that pound yen should be a sell. But given the inflation narrative, as we saw in the second half of the year, that was the contrary in the pound yen. So information is changing. Right now, as we look, as is at the moment, and we look into the year ahead, what we do know is inflation is high. There's future expectation of interest rates being increased to cool down the inflation. And one of the instruments or assets that is likely to be affected is gold, because gold is a non-interest paying asset. And it tends not to do well in high interest environments. So you'll find that the price of gold is been of late under pressure, especially around events of inflation announcement days, in particular the US CPI data and so forth. So you sort of see that is a trend. The economies are opening up. Oil, as we saw last year, dipped down way below 70. And now it's sitting at $90 a barrel. And the perception, the view is oil could get to triple digit later into the year. Why? Because there's demand that's driving it. As economies open up, people are traveling more, people are consuming more energy, and that is now starting to be seen in the price of oil. There is not enough supply yet to meet the demand. So up until that supply comes online to meet the demand, then the price of oil is probably going to be, upward pressure, as we're seeing at the moment. So those are some of those evident trends. If you look at, for example, cryptocurrency, if you look at Bitcoin, in the last 2-3 years of its analysis, when it's the pattern, which is what technicals do, they give you a history of price action. So you look at December leading into January, Bitcoin tends to do poorly. So maybe that's a chance for the sellers. But of late, it's been rebounding, off the sub 30K price action. It's now sitting around, call it 44, the last time I looked at the charts. So already it's ticking higher. There's a higher trend, and it's sort of repeating the past maybe 2-3 year trends of, it moves down aggressively, then it starts picking up, and you'd want to ride that wave. That's an easier trade, to ride that wave as it's going higher with the right risk management. So these are sort of like the trends that are forming in themselves, So now the question is it sustained? Is it about to reverse? if it reverses at which level, at which point, so that our clients are able to take advantage of those trades.
Yeah, sure. I'm learning a lot right now. I am learning a lot. I'm learning a lot right now. Like you're opening my mind even much further, because I know I sit down with a lot of traders, but like I said, it's my first time sitting down with a market analyst from a somewhat corporate level.
Yes.
Yeah, and I appreciate you just sharing everything. So is it required of you to be good fundamentally and technically, or does it not matter, or is it a thing of you need to pick one and focus on one?
So that's a very good question, and it's important, I think, to understand what the two disciplines are, and at each point they are going to intersect. There's a point where they come together. So while you can be a strong fundamental guy or significantly fundamental analytical driven, there's some aspect where you look at some technicals and vice versa. And why? Because what fundamental data does, it drives price action. What technicals do, they analyze price action. So in order for you to trade, you need to know what the price action is, where the price is. So you can't say, I'm going to sell $Rand at 14 when the market is at 15.50, for example. So you need to look at the technicals and say, where is it gone? Where has it come from? And where is it likely to go? And then now the levels vary in terms of that analytical ability. There's some notion that when analysts can't explain what's happening in the market, they tend to gravitate towards technicals. But it's not always the case, right? Because what that price action is doing is showing you all the information that's available in the market. And if you can't explain what's happening in the market, either you are not aware of the information or there's no information that's come in. It's just your buyers and sellers. Maybe there's a big buyer out in the market for reasons best known to the buyer, or there's a big seller in the market for reasons known to the seller. Not necessarily fundamental driven in terms of economic data. It's just pure supply and demand. Maybe the buy side of the market is rebalancing portfolios, and so there's going to be some movement in assets and price action and so forth. So those are some of the things you need to be aware of, and not sort of like try crystal ball what's happening in the market.
Sure. It's been such a great conversation so far. It feels like we've only been talking for 5 minutes, and it's actually been a while.
Well, yeah.
So, from your own trading right now, I ask this for everyone right now. Biggest loss, favorite trade. So, okay, I think let me ask it this way: what has been a trade idea, because you generate views, like you said. What has been a view that you looked at and then you were so sure about that view that no, this has to go in a specific way?
Wow.
Where you were like, no, this one is a winner regardless of anything else. Can you just share insights on that?
Wow. Okay. That's literally putting my neck on the block here. But I will speak on something that markets tend to predict. Markets are very good at wanting to predict price action or things, or etc. So one such is, for example, last week is a very good example. The US ADP data came out worse than expectation, and this was on Wednesday. The ADP unemployment change data. Now, that is the prelude to the Friday US non-farm payroll data. And at times, if that data comes out negative or a miss in as far as market expectation is concerned. The perception is that on Friday, the non-farm payroll data is going to be horrible. And so there are times when it has been a direct correlation. But there are times when that print on Wednesday has been an inverse to the non-farm payroll print on a Friday. And that's what happened this Friday. And I took a bet that so many times have markets said this was a miss. So likely Friday is going to be a miss. So I took the view that Friday is probably or possibly going to come out better than expectation. The US non-farm payroll data. And it did. And to my benefit, I was happy that that view was correct, right? Another view was looking at Euro CPI data before the print. And you look at where they have come from, that energy shortages and demand was high leading up to, to the Christmas period and, into January, into the winter months now in Europe. So my view on that was, there is likely more inflation than what is forecast because of, these inflationary pressures that have come through, and especially on how much energy Europe consumes, the Euro area consumes during that time of the year. And my call was, should a print of 5% and higher come out, there could be a possible rally in the Euro, and it did. And so when I speak like this, it's, vision 2020, hindsight. It sounds like, he's an analyst, so he's sort of like positioning his conversation to be, perfect, so to speak. And that's what I enjoy at Exness, when we have clients, on the table and have this conversation. We can put it to the test live and see, and I could be wrong. And there are times when I'm terribly wrong. But those are the times I've been fantastically correct, and I've enjoyed that.
No, that's great. Thank you so much for the conversation that we've had.
No, thank you.
I really enjoyed it. I've learned so much. I hope you guys have learned a lot as well. No, thank you. I'm sitting with Terence Hove.
Thank you.
Yeah, Terence Hove, market analyst from Exness as well. Exness Africa, the Africa department.
Yes.
So it's just like Exness.
Well, it's Exness entirely, but in particular the Africa team. Yes.
Team, from the Africa team. Yes, I'm Nqobile Tembane from Top Trader South Africa. Thank you guys so much for watching. And by the way, guys, this is the last episode for this season. We're going to take a quick production break, but we'll be back soon with more content from you, with more interviews, with some fire traders lined up for the next season. So we'll see you guys in the next season.
Thank you.